The Texas legislature is really, after 20 years, has led us to a fork in the road. And as Yogi Bear says, when you come to a fork in the road, take it. There's another expression he said, and I really like this one: if you don't know where you're going, you'll end up someplace else. So the discussion this morning is the options available to Texas school districts coming up this next year. Now, how do I change slides? There we go. Okay. TRS Active Care, for the first time in 20 years, is going to allow participating districts to exit the program if they choose to do so by December 31st of this year. This was made possible by Senate Bill 1444, which was passed in the last legislative session. As a reference, there's over 90% of Texas school districts are active care members. Approximately 145 of those districts are offering a commercial health plan alternative through the District of Innovation loophole. The first school district in Texas to seize that opportunity was the Raymondville Independent School District, September 2019, and then since then, over 145 other districts have followed suit. According to Senate Bill 1444, those 145 districts will no longer be able to offer a commercial health plan option alongside TRS Active Care. This bill takes effect. The change over to exit TRS Active Care would be September 1st, 2022. There's approximately 75 districts that have never joined TRS Active Care. And I went through a list of Region 1 districts before this call, and it looks like about 20% of those 75 districts are in Region 1. There's 15 school districts in Region 1 that have never joined TRS Active Care. There are approximately 147 districts in the state of Texas, the size, larger districts of 800 employees or more. And it's our opinion that it's likely half of those may exit the TRS Active Care program next year. Smaller districts may be able to offer competitive programs as well. There's a poison pill in Senate Bill 1444, and the poison pill requires TRS Active Care member school districts to give written notice of termination December 31st, 2021, which is 9 months out from the effective date. The problem with that is insurance companies will not bind coverage 9 months in advance. So can you imagine a superintendent of a school district gets in front of his board of trustees and says, I recommend that we exit TRS Active Care. And the board says, great, you must have found a competitive alternative. What is it? And the superintendent's going to have to say, well, we don't know yet. We won't know until closer to the effective date. So it's going to be a tough decision to make. So districts won't know what their cost basis will be should they opt out by December 31st of this year. And once they opt out, they can't get back in for 5 years. So what options do districts have? And I've identified 4 options here. We're going to go through each one of them. Obviously, one option is continue with TRS Active Care. The other 3 options are options available in the marketplace: self-funded insurance, fully insured insurance, and individual coverage health reimbursement accounts, which is by definition a group health plan. We'll talk about TRS Active Care first. It's a large 400,000 plus member government pool with a 20-year history of moderate rate increases. From my information, TRS Active Care member districts are going to receive an 8% overall pool increase September of 2021, with the only benefit changes on the high deductible plan. TRS Active Care does not require any participation requirements, and this is a real important point, and perhaps one reason why TRS Active Care, as well as most group plans throughout the country, are suffering higher cost and cost shifting back to members, because when you have no participation requirements, you have the phenomenon we call adverse selection, where the younger, healthier employees may opt out, seeking coverage on the individual market at lower rates. So TRS Active Care has no participation requirements. What I'm seeing in the marketplace and talking to school districts throughout the state, these districts are not achieving the magic number of 75% participation. There's a few that are, but the magic number for for good risk management is 75% participation. The minimum contribution the district must make under TRS Active Care is $150. The state, of course, puts in $75, so that's a total of $225. One of the things I've noticed in traveling throughout the state of Texas in the last 2 months, talking to school districts, is I was amazed at the very low contribution rates that the districts combined with the state are contributing towards the employee health insurance. The average district contribution, when you include the $75, is less than $300 per employee per month. I would say that the average is about $250 to $275 per employee per month. And that's a very low contribution, which means that plan participants are paying more on top of that. And that also leads to adverse selection. TRS Active Care members have minimal district administrative responsibilities, no local control over benefits or cost. There's no risk bearing whatsoever, and coverage is guaranteed issue, and pre-existing conditions are covered immediately. Self-insurance is an option that districts may want to consider. Those 15 school districts that I've identified in Region 1 that have never joined TRS Active Care, 100% of those districts are self-insuring their program. And self-insurance is the method of choice for over 75% of employer group sponsored plans in the United States. And there's a reason for that. Under a self-insurance plan, the district assumes certain administrative duties there in addition to what they're already used to doing. There are minimum participation requirements. The magic number is 75%. The district assumes risk, but it's mitigated through stop loss insurance protection, which protects the assets through pooling of large numbers. I think one of the concerns TRS Active Care member districts have expressed to me is I'm very hesitant to leave a 400,000 member pool and my 300 employee group cannot sustain large catastrophic claims. And the answer to that and the solution to that is pooling through stop loss insurance. So you become a part of a pool of a larger pool. Districts can determine benefits and cost structure, and districts can also establish a risk pool in partnership with other surrounding school districts. That's been done very successfully in the past. And then a new concept, which I've talked to several school districts in other regions about, a community-based health plan, combining the purchasing power of other political subdivisions within the area, including cities, counties, hospital districts, and what have you, to spread the risk. There is no guarantee issue under self-insurance because the stop loss insurance companies are going to look at the risk of each group that they are considering assuming a risk on. And there is the potential of them not quoting at all or binding coverage due to high risk factors. I would say that that possibility is rare, but it is very possible that that could happen. So I'll give you an example. If you have a group of 300 employee lives and you have 4 people waiting for a heart and liver transplant, and you have some high risk pregnancies and what have you, and a high diabetes population, it's going to be very difficult to find a stop loss carrier that will assume the risk to protect the plan assets. So if you're smaller in a school district, that's one of the concerns that you need to address. And probably if you're interested in exiting TRS Active Care, you'll need to do a feasibility study first to see if you're a candidate for that. Underwriting risk is problematic. TRS Active Care historically has not provided claims experience to those TRS Active Care member districts that request it. However, TRS Active Care did put out a memorandum June the 18th indicating that they were considering giving out claims information sometime this summer. 2 days ago, I had the school district that was able to get their claims information provided it to me, and I looked at it. It's really not credible. It's not detailed enough. So underwriting the risk for those school districts that wish to exit is going to be very, very difficult, but it is possible. It is possible to do. There's no guarantee issue. As I mentioned before, the stop loss carrier may decline the quote in the first place. Pre-existing conditions are covered immediately. Fully insured is another option. Carrier assumes all the risk. You pay your premium, they pay your claims, you're done. Benefit flexibility is limited. Your choice of benefit flexibility is limited to what they're offering you. Exhaustive underwriting, they're typically, since they can't get good, credible claims experience, they're going to require health questionnaires for every single employee wishing to participate in the plan, and that's a very cumbersome process. And it's also a process that leads to errors on the part of the underwriter, because not everyone is willing to give out their personal health history. And quite frankly, some people are not totally forthcoming on their in answering the health questions, and that could be a problem. There is a statute in Texas that few are aware of. It's effective 2004, where it allows Texas school districts, no matter what size, to consider themselves a small group. And in Texas, the small group statute, insurance purposes, that's groups of up to 50 employee lives, must be guaranteed issue coverage from any carrier, admitted carrier in Texas that's in the small group market. So you could typically have 1,000 life employee group, a Texas school district of 1,000 employee lives, actually be guaranteed coverage through any of those carriers in a small group market. When that bill passed in 2004, just for fun, I tested it, and I sent a request on a school district in the Rio Grande Valley to Blue Cross Blue Shield. It was really interesting to see the reaction, but at the end of the day, they had to give us a quote, and it was very competitive. It's guarantee issue, and pre-existing conditions are covered immediately. The last option, as we see it, is individual coverage HRA. This is by definition a group insurance program made possible January 1 of this year from the previous administration. But it allows an employer basically to get out of the group medical plan and pay for individual health insurance policies for employees that purchase those policies. There's a lot of advantages to that, and there's some disadvantages to that. It allows employees to pick and choose the coverage of their choice that fits their needs. They can pick and choose the carrier. Some may want Blue Cross, others may want Aetna, others may want Aetna, United Healthcare, Cigna. They have the freedom to pick and choose the carrier of choice. Coverage, of course, is portable. It's guarantee issue, and pre-existing conditions are covered immediately. So there's a lot of positive things about individual coverage HRA, but some of the negative things could be that the choice of individual policies by geographic area in Texas may be limited. For example, where I live in DeWitt County, Texas, there is one carrier for which I could purchase an individual policy. It's Blue Cross Blue Shield, and it's an HMO only. So it's not a good fit for all, but it could be a good fit for others. Some of the considerations districts have to think about is, if you stay with TRS Active Care, you're out of the health insurance business. And there's a lot of good things to say about that. I remember when TRS Active Care took effect, I called on one of my Texas school district clients in the Rio Grande Valley, and I'll never forget how that conversation went. I met with the superintendent, and I asked him, what are you going to do? Are you going to continue with our program here? We actually had Mutual of Omaha in place there. Or are you going to go with TRS Active Care? And he said, Bill, are you crazy? I'm going to go with TRS Active Care. It gets me out of the health insurance business. I don't have to deal with insurance brokers like you. I don't have to deal with insurance committees. And if anybody within my group has a complaint about the insurance, I tell them to call Austin. So that was the reaction that I got from that school district. And there's some things to be said about that. Opting out of TRS Active Care puts the district in the health insurance business. And if opting out, does the district have the expertise, discipline, commitment needed to reach expectations and goals? And I think that's really, really important. Not only is a feasibility study to determine if you're a candidate for self-funding or any of the other options, I think you need to determine whether or not the district has the commitment going forward to offering and managing a program outside of TRS Active Care. That basically was a very quick presentation of the options that I see it through TRS Active Care, and I'll be glad to take any questions.
Any questions on the chat? Bill, on the Senate Bill 1444, could you discuss some of the, and I'm sorry, I've been a little, not too much distracted, but a little distracted on the requirements for the ESC and the committee. I didn't give you a heads up about being prepared for that. We've got to form a committee of 9 individuals, I believe it is, from the ESC.
So part of 1444 requires each region, each educational service center to form a committee to do a study to report back to the legislature, I believe right prior to the next legislative session, to survey all member districts as to what plans they have, how they're funding it, and their cost basis and what their contributions are. And that data, I assume, is going to be used during the next legislative session for whatever purposes they see fit. I think it's going to be extremely interesting. I think it's, yeah, for example, those 15 school districts that are not in TRS Active Care right now, I think once you do a survey of those and compile those statistics, I think it will be fascinating information.
And the composition of the committee, I'm sure, does involve some of the school districts. So districts, just be aware, and charters, that you may be called upon by Rumalda and by Region 1. The ESCs are trying to put together how exactly we can all 20 of us, we all want to come with the same type of report or a similar report in terms of to the legislature in terms of next actions and so forth. So we'll definitely need district input. So please be available. 15 of our districts, as Bill mentioned, are self-insured. I'd love to see some of the numbers in terms of how those funds actually look, in terms of fund balances on those funds, just so that when other districts reach out, and want to go the self-insurance route, and as Bill mentioned, though, you can still form other groups, a group of ISDs. As Bill mentioned, I had seen that one of our districts, at least, or 2 of them, and this was probably pre-pandemic, before the pandemic, were fully funded, but I guess they're now in the self-funded market, unless they went over to TRS Active Care at some point. So we do thank you for the information, Bill. And if there's no other questions, or we'll keep you posted as if we get any questions. And Rumalda, of course, will lead the charge on that committee and the work that's being required by the ESCs on Senate Bill 1444. You take care, and we will keep moving here on the agenda.
Thank you.